the last session, we have seen the piecemeal distribution under the proportionate capital method. Okay. In this session, we are going to deal with piecemeal distribution under maximum loss method. Okay. What is piecemeal distribution? Piecemeal distribution is at the time of dissolution, the firm, as I told already, the firm has to sell all the assets and settle its liabilities. It has to settle its liability because the firm is not going to continue its business. It is permanently closed. Okay, the firm is closed permanently. Okay, and so they sell the assets and settle the liabilities. It is not possible for the firm to sell all the assets at once. Practically, it is not possible. It takes a long time to sell the assets and settle the liabilities. Okay. Till the time the settlement, the order of priority is first they have to settle the creditors and external liabilities. Second, partners loan. Third is if any amount is available in the firm, that should be distributed among the partners. Okay. Towards their capital. Okay, that is the settlement. Okay, so the settlement, they have to wait for a long time. If all the assets are sold, then only all the liabilities are settled, then only they can, the firm can estimate the loss on realization. Till the time, the partners has to wait. Okay. The partners have to wait for a long time because it is not possible for the firm to pay, to make payment to partners unless the total profit or loss is known. Okay. So, the partners unduly wait for a long time and they will have to face a lot of financial constraints. Okay. So, in order to relieve the partners from financial problem, they should paid as and when the firm has funds left with it after the payment of all outside liabilities. After the payment of all the outside liabilities, as and when the firm has money, that is for realization. If the firm has got realization money, it is used by the firm to settle the partners. Capital. Okay, this is nothing but piecemeal distribution. Okay, first they settle sundry creditors and then if the partners advances any loan, that has to be settled. Finally they have to settle the capital of the partners. As and when the assets are realized, the capital of the partners are settled. That is called piecemeal distribution. Okay, otherwise they have to wait for a long time to get back their money. Okay. So, under the piecemeal distribution, we have two methods. One is proportionate capital method. Another one is maximum loss method. Under the proportionate capital method, we are comparing, the firm is comparing the capital with their profit sharing ratio. Okay. And first step, they have to calculate the basis capital. Who is the least contributor of capital? Then from that basis capital, we have to calculate the surplus as well as absolute surplus. Okay. So last class, we have seen all those calculations. So first they have to settle the highest contributor of capital. Again, they have to deal with the surplus. And then after the settlement of the highest contributor, then if the firm has any amount, that should be distributed among the partners in their profit sharing ratio. Okay. So that is proportionate capital method. Then let's see what is maximum loss method. Under this method, it is assumed that each stage of realization of assets, the remaining unrealized assets are considered worthless. See, already I told it is not possible for the firm to sell its assets immediately. Okay. So first realization, it may sell its furniture. In the second realization, the land and building may be sold. Third realization, machinery may be sold. So when they first in the first realization, they sold furniture. They considered the remaining land and building and machinery are worthless, and they compare the amount in their hand with the capital contributed by the partners, and they ascertain the maximum loss. This maximum loss, that is realization loss, is calculated at every stage of realization and distributed among the partners in their profit sharing ratio. The balance left on the capital account will be the amount payable to partners. When the maximum loss is deducted from capital, and if the capital account of any partner shows debit balance on account of such loss, he is presumed to be insolvent, and his deficiency is to be charged to the solvent partners in the ratio of their capital as per Garner versus Moray rule. The credit balances of capital account of the partners would now be equal to the amount of cash available for distribution. At the next stage of realization, the opening balance of capital would be the amount of capital as reduced by the amount already paid. The same process has to be applied in the cases of subsequent realization. It is absolute that before the date of affairs is reached, current realization expenses, the creditors and partners loan must be paid off. Let's see the problem. Let's see how to do the problem. This is question number 1. The following is the balance sheet of Messrs. A, B, C who share profit in the ratio of 2:2:1. Sundry creditors 30,000, capital 30,000, then A, B 24,000, C 8,000. Total of the balance sheet is 92,000. Cash 4,000, sundry debtors 44,000, stock 44,000. Total of the balance sheet is 92,000 rupees. The firm was dissolved and that assets were realized gradually. Rupees 20,000 was received first, rupees 30,000 was received next, and rupees 18,000 finally. Show how the distribution was made. Follow maximum loss method. Okay. The second method we are going to follow. Let's see. So, this is the statement. A statement has to be prepared like this. First column particulars, second column realization, third column creditors, fourth column capital. Okay. Here the partner's loan is not available. If the partners advances any loan, that should be written here. Before the capital and after the creditors, they have to be settled. Okay. In this problem, there is no partner's loan account and so capital. What is the opening balance? Balance brought down is creditors 30,000, A's capital 30,000, B's capital 24,000, C's capital 8,000. Okay. So the ratio is 2:2:1. Then cash. Cash is 4,000 rupees. Then paid to creditor. That cash is used by the firm to settle the creditors first. Okay. We settle the creditors, and so the total cash that is available in the firm is 4,000 rupees. That is used by the firm to settle creditors. So the capital of partners are not settled. Okay. So the partners capital account, the partners are not paid any amount. The balance due is for creditors after the cash balance which is settled to the creditors. The balance is 26,000 for creditors. The partner's capital is 30,000, 24,000, 8,000. Then first realization amount is 20,000 rupees. It is given in the problem. So the balance due for creditor is 26,000. From this 26,000, we have to deduct 20,000 because we have cash to the extent of, that is first realization amount is 20,000. That has to be used by the firm to settle the creditors, so 20,000. The capital contributed by the partners is not settled here because there is no money that is available in the firm. Okay. Then the balance due after the first realization is creditors 6,000 rupees, A 30,000 rupees, B 24,000 rupees, C 8,000 rupees. And the second realization, then we go to the second realization. Second realization amount is 30,000. Okay, the balance which has to be settled to creditor is 6,000. So that has to be settled first. Okay, so from 30,000, first the firm used 6,000 rupees to settle creditors. So the balance is 24,000. Balance of creditor is nil because we settled the entire 30,000. We paid cash is 4,000 rupees, which is available in the firm, and then out of first realization, we paid the entire amount, that is 20,000. Out of the second realization, we paid the remaining amount, 6,000. So the creditors are fully settled. As usual, the balance is, remaining balance is, the capital balance of partner is 30,000, 24,000, 8,000 rupees. Balance due. The realization amount which is in the firm is 24,000. The capital due is 30,000 for A, 24,000 for B, 8,000 for C. Then balance due is realization amount. The firm has 24,000 rupees. Creditors are fully settled. Now the firm is liable to settle only the capital of the partners. Capital of A is 30,000, B is 24,000, C is 8,000. In this stage, because they settle the external liabilities. Okay. At this stage, the firm has to calculate the maximum loss. Okay. Because according to the firm, the firm is considering all the remaining assets are waste. Okay. So they compare the amount in their hand with the capital contributed by the partners. Okay. Total capital amount is 30,000 plus 24,000 plus 8,000. That is 62,000. So, okay. Then from that 62,000, the cash in their hand out of realization is 24,000. So the maximum loss is 38,000 rupees to the firm. Okay. It considered the remaining assets are waste. Okay. So 38,000 is the maximum loss. At this stage, in each and every stage of realization, the firm has to calculate the maximum loss. In this stage, the maximum loss is 38,000. This 38,000 is distributed among the partners in the ratio of 2:2:1, that is profit sharing ratio. If we distribute this 38,000 in the ratio of 2:2:1, the partner A gets 15,200, partner B gets 15,200 because the ratio is one and the same. Partner C, he is debiting 7,600 rupees because this is a loss. Okay. So these loss is deducting from the balance. Okay. So we have to deduct. Okay. So from 30,000, if we deduct 15,400, the balance left is nothing but cash paid. Okay. Once again, I explain. At each and every realization, the firm has to calculate the maximum loss. How it calculates the maximum loss? The amount available, that is 24,000. It compares the amount available with the capital of the partners. The total capital of the partner is 62,000 rupees. So from 62,000, it deducts 24,000. So the remaining amount is 38,000. That is the unpaid amount to the partners. Okay. So that is the maximum loss. Okay, maximum loss is distributed among the partners in their profit sharing ratio. That is 15,200, 15,200 and 7,200. If we deduct 15,200 from 30,000, the balance is 14,800. If we deduct 15,200 from 24,000, the balance is 8,800. Then if we deduct 7,600 from 8,000, we will get 400 rupees. This is nothing but cash paid. Okay, the balance of capital after deducting the maximum loss is considered as cash paid. Okay, so the cash paid to A is 14,800, B is 8,800, C is 400. Then again we have to calculate the balance due after this realization. How to calculate the balance due? So the balance due, this is number 1 and this is number cash paid is 2. So if we deduct 2 from 1, we will get the balance due. What is 1? 30,000 is 1. From 30,000, if we deduct 14,800, the balance due is 15,200. The maximum loss is repeated again. Okay. Then cash paid 8,800, that is 2. 1 is balance. From 24,000, if we deduct 8,800, we will get 15,200. Then balance due is 8,000. From 8,000, if we deduct 400, we will get 7,600. This is the balance due for partners at this stage. Okay. Then first 2 realizations are over. Then the third realization amount is 18,000 rupees. And each and every stage we have to compare the amount available with the capital contribution. Okay. 18,000. What is the balance of capital? 15,200, 15,200, 7,600. If we add, we will get 38,000 rupees. That is, the firm has to settle 38,000. But it realized only 18,000. Okay. This is the last realization. Only 3 realizations the firm has. This is the first realization is fully utilized by the firm to settle the creditors. Second utilization also used partly to settle the creditors and partly to the capital of partners. And third realization, that is the last realization of the firm, 18,000 rupees. Okay. It has to compare the amount in its hand with the capital which it has to be paid. Okay. So the capital which the firm has to settle is 38,000 rupees. Amount in its hand is only 18,000. So the maximum loss is 20,000 rupees. Okay. This 20,000 rupees should be distributed among the partners in their profit sharing ratio. That is 2:2:1. Okay. So A partner's account is deducted to the extent of 8,000. B's partner account is deducted to the extent of 8,000. C's partner account is deducted to the extent of 4,000 rupees. Okay. From 15, this is the balance due. This is the maximum loss. Okay. Then the balance left on the capital account will be the amount payable to the partners. So balance left is how much? Balance left is 15,200 minus 800 is 7,200. 15,200 minus 800 is 7,200. 7,600 minus 4,000 is 3,600. That is nothing but the cash paid to the partners. Okay. So the cash paid is how much? The balance from the balance due. If we deduct the maximum loss, the remaining balance of the capital is cash paid. Okay. Cash paid is for A is 7,200. B is 7,200 and C is 3,600. Okay. Then we can easily calculate the balance unpaid or realization loss. Okay. So balance due is 3. We have to write 3 here. Okay. From balance due, if we deduct the cash paid, we can get the balance unpaid. Okay. Here the balance due for A is 15,200. From this 15,200, if we deduct 7,200, the unpaid balance or realization loss is 8,000 rupees. Here the balance due is 15,200. Cash paid is 7,200. So the unpaid balance or realization loss is 8,000 rupees. Here the balance is 7,600 and cash paid is 3,600. So the balance unpaid is 4,000 rupees. Okay. So this is balance unpaid or realization loss, that is 8,000, 8,000, 4,000. Okay. 2:1. Okay. This is the method to prepare a statement showing distribution of cash under maximum loss method. Hope you understand this concept. We will see one more problem.